Hello, I'm Dr. Atwood, and I'm going to talk about some additional considerations you need to keep in mind if you earn income from your name, image, or likeness. So the good news is you may get paid for your name, image, or likeness, but the bad news is you may owe taxes. Specifically, you may owe federal self-employment tax, federal income tax, and Arkansas state income tax. To illustrate how these taxes work, let's look at a simple example. A student athlete named Parker received $25,000 in income from their name, image, or likeness during the calendar year. Parker is single, is a resident of Arkansas for the entire year, and has no other sources of income during the year. So no taxable scholarships, no summer job, no interest or dividends, or any other kind of income. In this simple example, Parker would likely owe federal self-employment tax of $3,532, federal income tax of $1,102, and Arkansas state income tax of $506. That means Parker will keep only $19,860 of the $25,000 of income earned after paying taxes. Parker's taxes will likely total $5,140. If we divide that $5,140 by the $25,000 of income, we find that the taxes are 20.56% of the income. This is generally referred to as the effective tax rate, or ETR. Now let's look more closely at these three types of taxes. If you have self-employment income of $400 or more, you will owe federal self-employment tax. If you've ever had a job and received a paycheck, you may have noticed that your employer deducted Social Security tax at 6.2% and Medicare tax at 1.45% of your gross pay. What you may not know is that your employer also matched these amounts. So a total of 12.4% of your gross pay went into the Social Security system, and 2.9% of your gross pay went into the Medicare system. Now, a self-employed person has to pay both the employee and the employer shares of these taxes. So Social Security tax is 12.4% and Medicare tax is 2.9%, for a total of 15.3%. There is a cap on the amount of income subject to the Social Security tax, and that number gets inflation adjusted each year. The cap was $137,700 for 2020. So you will not pay Social Security taxes on earnings over the cap for the year. There is no cap on income subject to the Medicare tax, though, and in fact, an extra 0.9% tax rate is applied for income over $200,000 for a single taxpayer. Now, employers get to deduct their share of these taxes paid, so a self-employed person gets to deduct 1/2 of their self-employment taxes. The calculation is 92.35% of total self-employment income, which comes from 100% minus 1/2 of the 15.3% of taxes, and then you take that whole thing and multiply it by the 15.3% tax rate as shown. So if you earn income from your name, image, or likeness, you are likely to be considered self-employed and subject to self-employment taxes. So in our example, Parker will likely owe a total of $3,532 in self-employment tax. Income from your name, image, or likeness is also subject to federal income tax. However, you can claim a deduction for 1/2 of any self-employment tax due, and you can take a standard deduction. The standard deduction is $12,400 for a single person in 2020, and this number gets inflation adjusted each year. So Parker's federal taxable income equals $25,000 less 1/2 of the self-employment tax due, less the $12,400 standard deduction, which is $10,834. The federal income tax rates are graduated from 10% to 37% based on income brackets. Income in higher tax brackets is taxed at higher rates. Per the 2020 federal income tax table, Parker would owe $1,102 of tax on the $10,834 of federal taxable income for the year. If you are a resident of Arkansas for all or part of the tax year, you will also likely owe Arkansas state income tax. For state tax purposes, income from your name, image, or likeness is taxable, and a single individual can claim a standard deduction of $2,200. The Arkansas state income tax rates are also graduated based on income brackets, and the rates range from 0% to 6.6%. Individuals also get a $29 personal tax credit. A tax credit is a direct reduction of the tax amount itself instead of a deduction to calculate taxable income. So Parker's Arkansas state taxable income would be $22,800, which results in a net Arkansas state income tax of $506 after taking the personal credit. Federal and state income taxes are progressive. You only get one standard deduction or personal credit for the year. In addition, the marginal tax rates go up as the amount of taxable income goes up. So not only do your taxes increase as your income increases, but your taxes increase at an increasing rate. For example, at $25,000 of income, Parker's effective tax rate is 20.56%. But at $50 of income, the effective tax rate is 25.95%. At $100,000 of income, the effective tax rate is 33.24%. And at $200,000 of income, the effective tax rate is 36.05%. So the taxes are increasing with the income, but they're also increasing at an increasing rate, which is what we mean by taxes being progressive. Federal and state taxes apply no matter what form the income takes. For tax purposes, income received in a form other than cash is called an in-kind payment. This includes property, meals, accommodations, and any services provided. For example, assume that a restaurant owner offers to let you eat at the restaurant once a week in exchange for hanging a picture of you in the restaurant that says, "Restaurant X is my favorite place to eat," with your signature. In this case, the value of the meals, which is what any other customer would pay for them, is income to you in the same way as if you received that amount in cash. Similarly, if the local barber offers to cut your hair for free, if he can hang a signed picture of you getting your hair cut at his shop, this is taxable income to you as well. And I should note that any amounts received in cryptocurrencies are also fully taxable in-kind payments. The taxable income is measured as the cash amount that the cryptocurrency could be converted into on the date it is received, even if it is not actually converted to cash or other property until a later date. Deductions may also be allowed for certain ordinary and necessary expenses incurred to produce income. Direct expenses incurred to produce income are deductible. For example, assume you have t-shirts made for $20 each with your name and picture, and then you go to an event where you sign and sell the t-shirts for $30 each. The $30 is income, but you can deduct the $20 direct cost, so you're only going to be taxed on the $10 of profit per shirt. Indirect expenses, including things like using your personal computer to make an internet post that produces income. Part of the cost of the computer is a personal expense and part of the cost is a business expense, and there are significant limitations on the deductibility of the business portion of those types of expenses. You should keep adequate current records of your income received and deductible expenses paid. If you are audited by the IRS, expenses will be disallowed if they are not adequately substantiated by contemporaneous documentation, which is just a fancy way of saying you have the receipts, bills, etc. to back up the expenses you claim as deductions. You must file a federal tax return reporting both your self-employment tax and your federal income tax if you have self-employment income of $400 or more. You must file an Arkansas income tax return if you have gross income before any deductions of $12,675 or more if you are a single taxpayer. Now, these returns are generally due on April 15th after the end of the calendar year in which the income is earned. If you earn significant amounts of income from your name, image, or likeness, you cannot wait until the year is over and the next April 15th tax return filing deadline to pay your taxes. You must estimate your federal taxes due and make quarterly estimated payments if you expect your total federal taxes, which is the combination of self-employment taxes and the federal income taxes combined, if those total $1,000 or more. You must also estimate your Arkansas state income taxes and make quarterly estimated payments to Arkansas if you expect your state income taxes to be $1,000 or more. So this presentation is based on current law, which may change. Historically, student athletes were not allowed to earn income from their name, image, or likeness. So the rules outlined here are based on the general rules for taxpayers. There have been several discussions by tax academics, tax practitioners, and even a couple of congressmen about the need to change the tax laws or issue additional regulations or rulings to clarify how student athletes will be taxed. So it is important to consult a tax professional if you earn significant amounts of income from your name, image, or likeness, as these rules may change before that time. So these are some things to keep in mind about your potential taxes due if you earn income from your name, image, or likeness. Good luck with your athletic endeavors, and go Hogs!